click record and let's see if it, okay, so that worked. All right, so we'll have this breakout room recorded. So you all have jumped into the amazing Sandhya breakout room, and she's going to unlock all of the secrets related to finding an amazing deal, underwriting it, and getting that thing to close and managing it, right?
Yep. Yeah.
All the above. So I'll do less talking. I'll let you have it, and we'll hopefully have some time at the end for Q&A.
Thank you so much for having me. Thank you. This is fantastic. And kudos to everybody who's here on a Saturday morning to spend their time. If you wouldn't mind in the chat box, just putting your experience level, as in, I have at least closed on one multifamily deal. I'm hoping to find a deal, or I've already got deals and I still want to be a better underwriter. Just that would help me tremendously in terms of making sure I talk to all of the levels that we have here. I am based in Dallas. I'm going to try to share screen. Let's see if this works. I've got something on Canva here that I've done before on underwriting. But the fun is that you can always tailor any conversation to your level, and feel free to interrupt me if that helps. But if you like the presentation style, we shall do that. Um, let's see if my lovely share screen works.
It
Are you
should.
able to see this? On how to underwrite and increase value in a volatile economy. Yes?
Yep, we see it.
Awesome. Okay. So a little bit about me. I have been involved in the multifamily world for about 5 years. And a lot of my doors that people like to brag about are actually as an LP. I'm a general partner in about 1,200 doors. I have 5 assets in the Dallas area that I'm actively asset managing. And so my underwriting numbers usually come from the perspective of somebody who also has to actually execute on the deal and actually manage and execute to those numbers. So, what is reality? So, that's very important, because if you don't come through on your projections, who's going to buy from you, right? Again, who's going to invest with you again? So, I have been a stock trader for a long time. That's how I built my wealth. I do have an engineering background, like most Asian geeks. And Maverick is my hero. If anybody's an 80s fan, or, I'm old enough to be your grandma, that's okay. But Maverick is pretty cool, dude, right? He is somebody who gives it his all, and he's not perfect by any means. But when the mission is in front of him, he's going to do whatever it takes. He's going to think out of the box. He's going to do whatever it takes to accomplish the mission. And that's why he's my hero. And then the other hero I have is Ferris Bueller, right? So that was my icon in my 80s, watching Ferris Bueller and saying, okay, life moves pretty fast. You have to stop and, take a break every once in a while. Otherwise, you're going to miss it. So don't stop to smell the flowers. Don't get so intensely caught up here, because when you take that day off and take a break like Ferris did, and if you've never watched that movie, Ferris Bueller's Day Off, I'm telling you, it's a phenomenal movie. So what that tells you is, even in your intense world of real estate, multifamily, whatever you're going through, if you take that break and you come back, you're going to get such a great perspective to solve that problem that right now you're too close to think about. And that's one of the reasons he's my hero. Is don't miss out. Like, it's glorious spring weather here in Dallas. So I'm very happy that this meeting is early in the morning, because then I can go out and spend the day. By the time my team wakes up, I'll still be part of his day. My passion project's financial literacy and free math tutoring, because it's not for you to be able to do calculus. It's for you to keep your money that you make. That's the point of financial literacy. And I have 2 companies. So just like most of us, as syndicators, we try to raise money from investors and provide value by giving them a different investment than Wall Street, right? So that's engineered capital. And then ACE operators is for those who are already general partners, and that's my mastermind to help you operate your deals more efficiently. And the typical value I try to give people is, within 30 days you should be able to increase your NOI by at least $10,000, or I give you a refund. So that's my mastermind. The most important thing about underwriting is to underwrite for cash flow. Never forget that the bottom line, after you do all your spending, your net cash, just like a family living paycheck to paycheck, right? You need enough money coming in to pay all your bills. A lot of emphasis goes into the NOI, because that is what gives you the value of a property. But you still need ultimately cash left over because that's what you're going to distribute to investors. So most horror stories in real estate start with poor underwriting and due diligence up front. You don't know what you're underwriting to, or you didn't assess your expenses properly, etc., or you had unrealistic projections. So underwrite for cash flow. Cash flow is what you need because you can't control interest rates, which to some extent determine your sale price. So you got to be able to hold on to the deal for cash flow for a while so that you're not forced to sell it because you're running out of money. That's why underwriting for cash flow is so crucial, right? Because it's what gives you your pulse on profitability. Like, how much money do you have left over to make distributions? How do you get investors coming back? It's by actually making distributions and ultimately a profit on the deal. So always never forget to be net cash positive. Okay, put a little note in the chat box if you know where this is from. This guy that's got his eyes and saying why. Do you have any idea where he's from, who he is, etc.? Might get some brownie points for that. You're still awake. You're still awake. Okay, put something in the chat box telling me you're awake. And I will speed through it. And if you want me to slow down, I will slow down. What are the basic elements, right? In real estate, market is everything. So do the macro as well as your micro analysis. And then your physical, financial due diligence. There's also a little bit of environmental, etc. due diligence. And then you have your nice, lovely value add business plan. And don't ever forget that it's a team sport. So what are the strengths of your team members? Hone in on that. Even if they're not the primary underwriter, if one of them is like insurance background and finance background, right? Kind of add their perspective before you have a final underwriting and submit an LOI. Market selection is everything. Real estate market location is everything because I'm referring to apartment buildings which cannot be moved. No matter how much you want to, you're kind of stuck in that location. So never ever compromise on your market criteria. It's the one thing you can never ever change. You can always put money, you can always make a building pretty, you can always polish those interiors, you can make it look like a palace. You can't move that building. So never ever compromise on your location criteria, not even a little bit to have a deal. I really need a deal this year. I really haven't had a deal in over a year. Do not compromise on market ever. So all of this criteria has to be met. Now, some of you might be really good in dealing with high crime areas. For me, that is not something I want to do. That's why I have it on my list. But job growth, right? Never compromise on job growth. If there are not new jobs being added, if people are not moving in this direction, right? Like if you see this map, and I don't know how well you can see it, but you can see that the dark green, like Texas, right? People are moving here and people are moving out of your Californias and New Yorks, right? So that's very important. And you want to see the diversity of jobs. You don't want to be dependent on just one industry for your jobs, because if they shut down like a military base or one big Walmart in this small town in a tertiary market, then all the jobs are gone and they won't be able to pay your rent. And median household income is a very, very crucial topic there, because if the renters aren't rich enough to pay the rent of your property,
We have a
you're going
minute
to have
and
a
20
big delinquency.
seconds.
What?
We have a minute and 10 seconds in the top right corner.
Yeah, whenever it goes off, I'm just going to dismiss it. Don't worry about it. We got until the top of the hour.
Okay. Thank you for that. In
No
case I'm
worries.
getting kicked out. Why is median household income important? Can somebody put in the chat box the reason for median household income? Yes, Back to the Future. I love seeing that. Median household income is important because they should be able to pay your rent. So let's say your total rent plus utilities, everything, what does it cost a renter to stay in your property? Let's say that's $1,500. And you do a times 12, you're at $18,000. So it takes them $18,000 out of pocket per year to stay at your property. Let's do at least a 3 times that factor, a 3x factor. You're at $54,000. If the median income in that area is $40,000, you're going to have a problem, because you need a minimum of 54K now, starting now. But let's say you're planning on all this rent growth. and increasing your rents in the coming years. They have to grow with that, right? And things are getting more expensive. So I would say 3x is your minimum for your median household income in that area, and take your most expensive unit in there. Like if you have 3 bedrooms and all the way down to a studio, what is that rent for that 3 bedroom, including utilities? What is the cost for that tenant to stay there? And don't compromise on this criteria. You cannot suddenly make an entire population rich enough to afford your property. You just can't. And you can't move your building somewhere else, right? So don't compromise on market. That's why I keep like, this is everything for your property. If you compromise on your location, you'll be stuck with a bad property for a while that you can't execute on. I like low crime and I like low poverty level because I want to attract that single mom with multiple kids to go to the school near my property, kind of. That's how I screen my property. I don't want to deal with, druggies and, drug dealers and violent crime for sure, etc. Because it's going to keep the tenant I want away from my property and I won't be able to control it. They could sue me for safety, etc. So I avoid not just crime in terms of the 1 mile radius. I actually look for that entire area to be a low crime area. And I'm spending a lot of time on this slide again because don't ever compromise on location. Did I say that before once? Okay, I hope I've said that a few times. If there's only one thing you're going to take from all of this, it's don't compromise on location. So I've lived in the Dallas area for 33 years. So I do have a slightly unfair advantage, if you will, relative to somebody else, because all I have to do is hear a property address from the broker, and I already know where this property is located and whether or not I'm interested. So they send me an address and I'm like, no, thank you. So I don't spend a lot of time underwriting. So if you already hone in on one market, if you're trying to find your first deal, or if you already have deals in a specific market, become the expert in that market. That's going to give you that unfair advantage. You already know it. If you can access it quickly, that's even better. If you can drive by it at night, it's going to tell you things about the property. Do I feel safe as a woman getting down, walking around my property at night? That's very important to me, that whole feel, that safety feel. What am I hearing at night? What am I smelling at night? What am I feeling at night in that whole area, that population? Like it's after dinner, we go to dinner in this area called Addison in the Dallas area. And then I drive by one of my properties and I'm like, how do I feel here? It's very important to get that pulse. School ratings is sort of important, but if you have a large demographic, let's say that's somewhat ESL and Hispanic and some other, like even from certain other countries, if they're not the strongest in their English, sometimes the school rating is low. So I would say that's a little bit subjective. So you can kind of put your own pulse on that. But the feel of the property, the feel of the neighborhood, how in single family we say, don't buy the white elephant in that street or that neighborhood. You kind of want to do the opposite here. So you want to find the C class in a B neighborhood or the B class in an A neighborhood. Okay, I think I've hammered enough on market. Let's go to financial.
Sandhya?
Yeah.
So, sorry, can I jump in and ask a quick question?
Yeah.
Back to the market selection piece. So, sometimes we're in conversations and we ask, "What's your market?" And somebody will say, "Tennessee," right? It's a big state, and not as big as Texas, obviously. But when you are saying market selection, how granular should people get? Are we talking about a specific city, a set of cities? Is it okay to identify an entire state? Can you get more specific on that?
Yes. At the macro level, I like to look at all these other factors, but at the micro level, like for me, it's only Dallas. So
Okay.
let's say you have a team of 3 of you who've decided to be GPs, and one's in Nashville, one's in Houston, one's in Dallas. You could have all those 3 as your markets, but really going to the granular level of the street level, the submarket, the division, the little neighborhoods, knowing to that level of detail, the more you know, the better. And to be a subject expert, I would say try to really hone in on 1 to 2 markets. Don't try to go to 5 different markets. Like if you're in California, where's your partner located? I would say pick that market, or where you already have maybe a passive deal, then pick that market because you at least know something. You've looked at financials of a deal in that market. So you're not just listening to some broker's projections and putting that in there. Yeah.
Perfect. Thank you.
On the financial due diligence, I've made a list here and I can make these slides available to anyone who's interested. Just find me on LinkedIn or Facebook and ask for it. And this is from today's presentation. The sales comp in your area is everything. Why is that? Because you need to know what they're trading at. What is a property that's, let's say, a B class or a C class per door trading at in that submarket? That's going to be important. So I'm going to use Dallas as the example because that's what I'm most familiar with. But there's this area called Park Cities and Highland Park where the wealthiest live. That's where old money is. There's Southern Methodist University there, and it's not far from downtown Dallas. The price per door on a house, an apartment, anything there is a completely different beast than South Dallas, which is only 6 miles away, you know? So you really need to know what things are trading for within that submarket. So try to get that sales comp data from the broker who's listing this property and say, what has sold? And, in the last 12 to 18 months, not a whole lot has traded hands, right? So the pricing has drastically changed based on that. But you always want to start with your end in mind, okay? So today I'm buying a deal, let's say at 80K per door. I'm going to come in and do this value add plan and add 10K per door, 15K per door. So then I'm going to sell it in 5 years and I'm going to, double my investor's money. What price does that have to trade per door in 5 years for you to get that kind of return for your investors, right? That's what I mean. Like start with the end in mind and reverse engineer it. Yes, I use engineering terms a lot. So reverse engineer it. So what realistically is this going to trade for in 5 years? And that's a prediction of the exit cap rate in the future. Got a question? Go right in.
Yeah, so as a good example, Illinois is a bad one to use because there's obviously population that's leaving. However, I'm really close to the St. Louis area. So my question is if you, in a market like today where there's not very many transactions and you don't basically, and you've never actually took anything the full cycle, how do you really know, like how do you judge, I would say, if things can actually move at the price that you're projecting? Or if they will? Is this based off of like how often buildings are traded and sold in that area? Or what can we look at to really understand if things move in the area over time, or if you're going to be stuck with something that you increase the value in, but now you're just going to have good cash flow?
So the most conservative you can be, the better, right? Obviously. So your Chamber of Commerce, economic trends in that area, government policies, are they business friendly? All of those things are going to drive that. But for me, one of the ways I underwrite it, let's say today I'm buying something for a 5.5 or a 6 cap. I'm going to underwrite it for an exit cap that's higher by at least a quarter, if not a half basis point for every year of hold. So if it's 5 years, it'll be another 1.25 to 1.5 cap higher for my exit than my purchase or entry cap. So having a conservative underwriting means exit cap is always higher than your entry cap, and by how much? Minimum is a quarter basis point per year of hold. So that's definitely one way to do it. But it also depends on how big your value add plan is. If I'm going to put 10K per door, but you're going to come in and do 25K per door and really completely update the property, then you need the property value to go up that much more for you to make a profit. So start thinking that, because everyone wants to come in and take this really classic unit and go from 0 to premium, right? I'm going to take it from a Motel 6 to a Four Seasons. Well, maybe you should just take it from a Motel 6 to a Holiday Inn Express, and then maybe a Marriott, So I like to do mine in phases. So don't go 0 to thing, because here you are spending all this money to go from a Motel 6 to a Four Seasons, but then half the people come in and they don't realize it's a Four Seasons, that it was just treated like a Motel 6. It's in this area. This is about it. And then they mess it up or trash it. And here you are going and spending 20K on the interior as if it was your own primary home, So really pay attention to that value add plan. But in here, what I was trying to say with this slide was do a thorough financial audit of that income statement, right? Do the lease audits match the rent roll? But in your financial audit of the income statement, a lot of times sellers can kind of embellish those numbers a little bit. So one thing I like to ask for is, do you have bank statements of the operating account that match this T12? So, oh, in January, I collected $200,000 at this property. Okay, do you have a bank statement that can confirm that in the operating account? Because a lot of times sellers can modify that data a little bit just to do the sale. When you do a lease audit, right, make sure it matches your rent roll. And that's something you get to do after you get a chance to, you have placed an offer and maybe you have to be under contract before you do that. But even then, that's a good time to get out of a deal if things just don't look right. And it's better to walk away from a bad deal than to be stuck in it for the next 5 years, and that too with investors' money. So keep that in mind. And then in terms of a financial due diligence, right, a thorough audit of the financials, which you can do upfront, saying, make sure that when you sign that PSA, purchase and sale agreement, you say that we need to confirm that your operating account matches what you put in your T12, right? The bank statement should match it. And then you want to match the lease audit against the rent roll and see if there's any discrepancies and be able to send that back to the seller while you're under contract with them, while you have that grace period for your earnest money, which today's a buyer's market, you should have it. And you want to make sure your loan product fits your exit strategy, right? If you're doing a heavy value add, you're saying, oh yeah, in 18 months, in 2 years, I'm going to refi from the bridge loan because guess what? The Fed is never going to increase the interest rates, right? That's what a lot of people thought 2 years ago, and guess where they ended up? A little bit of trouble. So you want to make sure you're not dependent on so much of the external factors and external risk for your business plan to work, right? That's a lesson learned for all of us. Is I wish I could refi now, but I can't kind of situation a lot of people are in. So are you planning that bridge to agency debt? And what is your debt service coverage ratio, DSCR requirement that the lender wants? Because never forget, the lender is your boss. So different lenders have different requirements for that. So when you're talking to your lender broker and they shop all these loan products for you, you want to ask them, what is a minimum DSCR I have to meet with this lender versus this lender? Some lenders are nicer than others, and we're finding that out as all these bridge deals come to maturity with their rate caps, et cetera, this year. So really, really get to know your lender. If you're in this business and going to be in this business for a while, consider meeting them in person, have lunch with them, have coffee with them, have a nice 1 hour long conversation with them. Don't just talk to them when you have a transaction in mind. In fact, pick their vein and let them get to know you and who you are so they can position you better with that loan product because they get to know you. Okay, who is your customer? By this, I mean your resident. Your resident is your customer. Without them, you would not be in business. So really try to understand if the property and its amenities, who are you catering to with it? Like, who wants a pickleball court versus a nice big pool where they sunbathe every summer, all day, Saturday, Sunday, versus who wants a soccer field and who doesn't care whether or not there is any kind of a playground or amenity, right? So really understand your demographic, who you're trying to serve with your property, and make sure every little plan you're trying to make is keeping them in mind. So just literally, I tell my property managers, I tell myself, I imagine my ideal customer, whoever that is, and give them actually a name, Maria, Tom, Juan, whoever it is, and say, will they want it? Who is your best paying customer and are they going to want it? And keep that in mind as you go through any kind of a business plan, CapEx plan. And here's the other obvious thing. What is the input or assumption you're putting into that spreadsheet? For every number you're typing into some kind of an analyzer spreadsheet, where did you get that number? Who validated that number? How did you research that number? Who is going to agree to that number? Did you ask your renter, by the way, I'm going to put a stainless steel fridge in here. You're going to have to pay me $200 more. What data supports that? So remember, your entire underwriting spreadsheet is only as good as validated numbers that go into that spreadsheet. So you need a budget from the property management company who's going to run that property for you, right? For every number. That's your rents, your other income, right? I'm going to charge $50 for parking. And this tenant who can barely afford my property is going to pay me $50 more to park 3 doors down. How realistic is that? That $50 is a lot. I was a student living in a C-class apartment. I'm telling you that $25 matters, that $50 matters. So what would I appreciate more? Having washers and dryers. If I'm a single mom, I'm a family, I got young kids, I'm in Texas. For me to take my laundry in 110-degree weather in August all the way to some other laundry center is a big deal. So I would pay you extra to have those washer dryers in my apartment. That is an amenity I will be willing to pay for. I may not pay you just to park 3 doors closer. So just think through that. Make sure the property management company has a presence in that local market. They may be really enthusiastic and say, oh yeah, we really want to get into the Dallas market. We've done so much here in, I don't know, Idaho, for that matter, right? If you don't know the nuances of operating in my local area, then you're not going to be the right PM. I don't want to be your scapegoat or your trial run, right? I want you to be established in this market. I want you to have good relationships already with the city code compliance, etc. I want you to know what a real operating, account and expenses would be like in that vicinity. What my bills are going to be like in Dallas could be very different from, I don't know, Colorado or New York for that matter. So you really want somebody with a local presence to give you those numbers. So for rent is your primary source of income. It's your bread, it's your butter, it's everything. So do thorough market research and really, really compare only similar comparative properties. What do I mean by that? They are similar in amenities. You can't compare a C to an A. They are similar in the demographic they're trying to serve. They're within a 1-mile radius. So look at it from the lens of a renter who's shopping in this area, wants to move into this area, and look at it that way. Like, why is this property better or worse? What are the amenities of that property versus my subject property? So what is my competitive advantage? Also disadvantage. What are things I can borrow from others? And then really know that local area well enough to know, oh, there's a big construction project that's going to happen here. They're going to shut down this exit from the freeway. It's going to limit the access to my property. It's going to limit the visibility. Oh, they're building a brand new school there, or they're doing the road repair. All of these little things could affect what's happening at your property or subject property you're trying to underwrite. So start being aware of that. Attend those chamber meetings. Have a presence. The more of a local presence you have, more you're going to have that competitive advantage. And if you don't have it, there's ways to work around it. You literally can find some nice college student who wants your extra $100, and you can go ask them to do Facebook Lives. FaceTimes for you, and they will be your walker while you're sitting here wherever you are. They're walking the property for you. They're walking that submarket for you and answering your questions live for you. Just pay them. They would love your extra money, and you don't have to spend money on a plane ticket. I'm just telling you, if you're remote, that's what I would do. Other income, I kind of touched on this already. This is just a list of examples of other income. What's realistic? Who's going to pay for it? Do they really appreciate these extra sources? Internet Wi-Fi is popular. If you can offer it at a lower price than what they could directly get from like Spectrum over here, they will pay for it, right? These are things they're willing to pay for because it's already part of their budget. Pets, a lot of people love to have pets. That's your free money, right? So you definitely want to have a plan where you promote pets if you can, and then enforce the cleanup. This is the worst thing, right? You don't want to see dog poo everywhere, all over your property. So definitely you want to be making sure your property management is good about enforcing that, but that's nice little free money for you. So always promote pets, have signs that are pet friendly, and et cetera, et cetera. Okay, we only have 10 minutes. I'm going to race through this a little bit. Controllable operating expenses. This is going to be every one of these things on this list is what you would be inputting into your analyzer spreadsheet for your operating expenses. These are the things for which you want the budget from the property management company. And these are the ones for which you want to get, like, let's say every contract service you've got, right? The seller is going to be giving you a list of contracts when you have a PSA signed. And so you want to let them know very quickly which ones you want to assume and which ones you don't. And you want to have your list of contractors ready to go from your lawn and your, pool and whatever else, utility contracts, etc. So if you already have a local presence, again, you know who you're going to use for all of this. And there's different ways for expense control that you can implement. But since we only have 10 more minutes, I really want to get you into the Q&A. If you don't have any questions, of course, I can keep going. But you know what these expenses are. What can you not control, right? Insurance to some extent. So you want to have a good insurance broker who's shopping for you. Like my broker's already told me, State Farm may not be renewing in Texas, so I may need to shop. You want to give them as much time as possible to do that shopping for you, so you're not last minute having to do something. And insurance paperwork is almost always identical, so you want to have that ready for you. And shopping insurance is going to make a big difference, at least in coastal areas in Texas. I think there was a raised hand. If there's a question, go ahead and ask. I wasn't monitoring the chat.
Yep. Eric has a question.
Yeah.
Or maybe pressed it on accident. I don't know.
Eric Segura.
We can see you, but we can't hear you. I don't know
You
how
are
complicated
muted
your
now.
question is, but yeah.
If you want to just type it in the chat box or something, then we can answer it that way too. But this is your below the line expenses. It's all your capital expenses, your mortgage, and things like that. So there are some things that impact your NOI and some things that don't. It looks like Linda also has a question. If you want to unmute yourself.
Yes, thank you so much. Sandhya, it's been a great presentation. I love the fact that you're in Texas because I am too. And I also an underwriter and asset manager. So I already connected with you online, if that's okay. And
Of course.
I guess my question is how what are your views on consigning these two? Because obviously, so I'm an asset manager because I've been working property management for a very long time. And because I love underwriting, I'm always thinking, well, if I underwrite a business plan, I also want to be the person who executes it.
Yep.
Or do you think it's more to stay in your lane? What are your views on that?
I do all of it. So I don't stay in any lane. I take whatever lane I have to take. So because it depends on who I'm teaming with and what the deal needs at that time. I love the fact that I can jump in at any stage. I can be your primary liaison with the lender, or I can be your primary liaison with asset management, which I usually am with a property manager. You do what works for you. What are you able to balance? Do you want to have a deal every quarter? At that pace, can you also be the primary asset manager? Or, do you want to also be raising capital? I think that's something all of us have to do in the team. So
yeah, that's a good point.
Yeah, you do what works for you. So like for me, because I also asset manage my deals, I don't do as many deals as other people do, right? A lot of people do a lot more deals than I have done, but that's because this is the pace at which I'm comfortable. So you make your rules.
That
That's
makes
the
sense.
fun of entrepreneurship. You blaze your own trail.
I like that though. Thank you so much for your answer.
Sure. And did we get that typed question from?
Yeah, we did. You want to read it, or I'll read it out loud.
Renters insurance. Yeah.
Yeah.
So for renters insurance, I think that's a requirement that we have in the PM agreement. So when they sign the lease, it should be in there because of the damage that could cause to their property. There could be an accidental fire. You just never know. So we like to require that. There's certainly a way for you to make money on it by offering it yourself and making a few bucks. So we have that option for them to buy it from us, or they should show proof of it when they sign the lease. I hope that answered the question. And yes, please ask your question.
Yes. Well, I just wonder if is that better for us when we do the letter of intent? Is that better for us to show the seller or the owner of the property the plan that we have as we like the plan for our capital expenditure? Is that good to do so? Like we show them our vision and our plan as we like renovate the property, or do you think it's something that we should just keep it to the team?
Ask the guidance of the broker. In some cases, like one case, we were buying it from the original builder's son. He was very emotionally attached to the property. So giving a little more background about us helped us win that deal. In some other deals, like, hey, you're buying from me. I don't really care what your business plan is. I don't want to know that detail. Just tell me that you've closed deals before, that you can close on time, and you're capable of raising the money because you've done deals that size. That's all I care about as a seller. So really, I would listen to the guidance of your broker who's very familiar with the buyer as well as the seller in this case.
Thank you.
Sure. So capital expenses, the most important thing is look at your ROI and payback period. So if you're going to do a $20,000 interior upgrade to your unit and all you're going to get for it is a $200 rent bump, I would encourage you to start with what I call a basic make ready and seeing what organic rent growth you can get from it, which is paint and fix whatever is broken. If something is hideous or an appliance doesn't work, replace it, and do a basic first and start with $50 to $75 rent bump and do it in phases. Then the second phase, okay, I'll give you a new appliance package. I'm going to charge you $100 more, right? Or your flooring is really bad. Maybe you can leave for the weekend. I want you to stay. You're my wonderful tenant. You've been paying your bills on time. Why don't you go away for the weekend and I'll come in and paint your unit and give you a whole new makeover kind of thing for the apartment, and you stay and I'll get $100 more. So to achieve that $200, I would go in steps, because paying $20K to do an interior and getting only $200-300, even $400 rent bump, you're talking almost 4.5 years for your payback period. I would look at things with a 2-year or less payback period in every little capital that you spend. Like pet fee costs you nothing, a couple of signs, maybe a pet waste station enforcing that. And then every quarter you have a little pet contest. Okay, you're done. That's a pet fee. That's basically free. Reserved parking, it's a stripe. Number everything and say reserved. The word reserved is literally a stencil in there. Okay, you can get $25 for it, do it, right? But really look at your payback period and ROI before you do a capital project. Yes, Ed had a question.
So as it relates to your make ready costs, generally there's like, I'm assuming there's this estimate that's being made. And I know in the multifamily class that I went to, that they said between 3,500 and I think about 6,500. I guess, how do you know when what's too much? Or is it about how much you bought the property for in general?
So when you're upfront underwriting and you've not even looked at a unit yet, it's hard to tell how much an interior is going to cost you to update, right? Because you don't know what classic condition it's in. That's what you want to ask your broker whenever possible. You want to read the reviews of the property, and because whatever they put in their website is going to be the best of the best. So you want to know what percentage of units are classic and what do they mean by classic. A classic in your definition may be different from theirs, because that's what's going to determine, therefore, this is my value add or yield play maintenance plan. So for me, a basic make ready shouldn't cost me more than $1,500, right? I think of it as paint touch up wherever necessary, fix whatever is broken, and then the time and the labor that goes into just the cleaning and whatever else, right? So what can I do for that $1,500? Can I get a $50 rent bump for that $1,500? Yes, let's do that, because that's about 2 to 2.5 year payback period, right? Versus $6,000. Why should I spend the $6,000? So I think of it like an immigrant. Like my food budget was literally $8 a week when I got here. So I question every dollar I got to spend on that unit. Is it something your resident is going to appreciate, right? So again, the way you underwrite a C class versus an A class is very different. Your A class tenant is like a Four Seasons client, right? Why is there a speck of dust over there? Versus your C class tenant is like Motel 6. Just give me a room that's clean and safe and has a shower that works, you know? So who is your client? And that's going to determine how much you pay. So I think we still have breakout room in progress. I'm going to continue. Deferred maintenance is going to be very important for you to assess. So before you make any offer on the property, make sure you and somebody who's experienced from a construction lens, a contractor's lens, and somebody who can really know what the code compliance would be for you, what a lender required repair could be for you to really drive the property. Because parking lot repairs, I'm telling you, are expensive to do, and your lender is going to insist on you doing it. So will the city. Even striping, the speed bumps, any potholes, anything else, you will be required to repair it, whether you like it or not, and you need to be able to budget for that upfront in your capital expenses. That's not really going to give you a big revenue boost, right? So plan for that. Anything that is going to affect the safety of the resident, anything that's going to affect their comfort, how many air conditioners do you think you need to be replacing? All of that is a lot of it you can find out just from your exterior.
Like to have you.
Oh, so random.
What's up, Mel?
What's happening, folks? I'm just here just to be here. Like I'm a facilitator, but I'm not facilitating the networking room. So, you know, the floor is y'all's.
Hey, Mel.
Jahira, how are you?
Good. How are you? It's so nice to see you.
Yeah, likewise. I was messaging Eric and I was like, I hate that I don't see y'all as often anymore. You know, my schedule is so insane. And then Kim asked me to join in this, and it's like, oh, sure, I'll give up a Saturday morning. So I don't know what I'm doing right now. I'm running after every little shiny object because it's fun. I may have undiagnosed ADHD, but don't tell anybody.
I'm the same.
Not to.
I diagnosed myself.
Yeah, yeah.
No,
Anyway,
but
sorry, y'all were
everything you're doing is great. So it's amazing.
glad y'all enjoying it.
Where do you live, Johara?
I'm in New York.
New York.
Yeah. So it has
Where-
its positive and its negatives. More negatives than
Yeah.
positives, I think.
We're in
Did y'all
California.
recently? Sorry, I thought y'all were in I thought y'all were in Georgia. Or that's
Wendy and Luis.
Wendy. Okay. All right, sorry. Didn't realize y'all were in New
No
York.
worries.
Okay.
What about you guys?
We're in California.
Oh wow.
Southern California. Because California's big.
I'm in Northern
However-
California.
Oh, originally from there.
I'm in St. Louis right now.
St. Louis, all right.
Michigan for me, about 8 hours north of Mel.
Hey, Jim.
The
Sat next
north
to
part
each
of
other at
Michigan.
Yes,
Luau.
sir.
Yeah.
Yes, sir. Good to see you guys.
Oh, good morning to you too.
Yes.
You always sneak up on here.
Good morning.
So what are you all's I guess maybe aspiring roles or current roles if you're in deals? Like what are you looking to do within the multifamily space? Or if you're in multifamily, because again, we're actually attracting people that are not necessarily in multifamily. So I guess if you're not in multifamily, then tell us more about what you do and kind of what you're hoping to get from this group.
So for me, I just recently got into the multifamily part. I started with multifamily about back in January. I'm currently a travel nurse though. So I have the access to like working with different doctors, nurse practitioners, stuff like that. So for me, that kind of presents the opportunity to be a capital raiser, but also underwriting. I love numbers. So the capital raising and underwriting, I knew kind of go hand in hand a little bit. Got to understand the underwriting and present it to investors. So that's kind of the aspect I'm looking to get into.
So do you go by William or Will?
Will is just easier for people to say. It's like one syllable, so people more so like to call me Will. But either or is
Yeah.
fine.
So my government name is Melvin, and I go by Mel. And I've had some people give me some flack because they're like, "Oh, Melvin is not that complicated. Just go by Melvin. You don't have to shorten." But anyway,
People, you'll be surprised how lazy people are. It's just that extra syllable,
Yeah.
People most likely to shorten it to Will.
Yeah, but
Jim's got a great
you-
name. They call him in the stream. Jim Conlon. I like that.
Oh,
Um,
I grew up going by Jimmy, but
Yeah.
Jimmy.
Jim was
I haven't
much
heard that
easier.
one yet.
Yeah.
So Will, I only I know a few other travel nurses that have combined powers to create like their own little multifamily group or whatever. It's SNK Investments. They're travel nurses. I think they live in Houston and maybe one of them lives in LA. But I would love to connect you to them if you're not already connected to a group of multifamily investing travel nurses, because I think y'all have like a unique opportunity because you got a lot of
SNK?
mobility. Yeah, SNK Investments.
Okay, for sure.
X.
I'm gonna put my Blink card in the chat, and if you can just shoot. Well, actually, my number is in my name, but if you can shoot me a text with your info, I'll share it
Okay.
with them and try to get y'all connected.
Absolutely.
I'm gonna make that connection happen. You didn't even ask for it, but I'm just gonna do it anyway.
Absolutely. I definitely appreciate that.
No worries.
Adding value.
So we're brand new to the space. We have passively invested in our first multifamily project. Obviously, would love to do GP. We've done other assets before. We've done small office and warehouse, also investing in businesses. My day job is I do work with companies and have done a lot of like mergers and acquisitions of small businesses and evaluating those. So they're lots of fun. Mondo's avatar is fire chiefs is our goal. So those are the two segments of people we want to potentially capital raise with, especially, for me, we're selling off some of our existing companies. And once some of that capital flows, I've got a group of investors that I want to pursue. And so we've all talked about real estate as our next avenue. So we're just looking for the right team, and we want to take our time to make sure we get on the right team where there's good connections and values.
Yeah,
And
that's really critical.
I wish we could invest in California. I love California, but I would just probably never put my money here.
Mhm.
Although 2 of our properties, we have an office building in Northern California and a warehouse here in Southern California. The warehouse is fantastic.
So Marina, what as far as M&As go, what has been your role with that? Just literally looking at financials or HR
Uh,
related stuff?
So as a small business owner, I wear a ton of hats and I tend to do a lot.
Okay.
I've probably been involved in about 8 of them. First working as, an employee, just a senior manager doing a lot of the heavy lift for larger companies that were being acquired. So I worked with a company that acquired other companies. Then I went with a small company and we started doing the same thing. So did 2 last year, working on 3 now, and we're also looking to sell 2 of our 8 companies. So
Gotcha.
I'm involved with finances. In no way am I a CFO accounting person, but I also handle the legal and the HR. I'm also not either of those. So, you just get right. I think it's similar to multifamily because what you do is you really work with experts. I know enough surface wise to be dangerous. I don't have the depth. So I partner with people who have depth once we get into a transaction. Right. So I'm not going to try to create a legal merger document. Right. I'm not going to do it, but I can read them and I can understand what needs to happen and just kind of coordinate that. So that's kind of what I do.
Gotcha. Very cool. Sahira Jam Bebith?
Yeah, I'll
Just
jump
work
in.
it too.
I'm gonna have to bounce here in a couple minutes. I've got an 11:30 potential investor meeting, so this is a good warm up, for the pitch. But
There you go.
so I'm up in Michigan, like I said, I'm in the multifamily space. We started investing, a partner and myself since 2011, but we're starting to really scale within the last 12 months, 15 months or so. We're up to about 150 units locally that we just self-manage. And then I'm passive in a few, like about another 150 units in the northern Wisconsin area, Green Bay. Yeah, we're looking in other markets, such as Des Moines, Iowa, if you're familiar, Indianapolis, and dabbling down in Minneapolis as well. I lived in Minneapolis for about 8 years with a former career of mine. So know that area pretty well. So.
All right, I unmuted myself. So my name's Shahira. I'm from Blackbridge Capital Partners. I'm in New York. I shared before. I think my computer might be lagging. Is it lagging for you guys?
It's not bad.
Okay,
No, you're good.
Okay, I started seeing it go a little slower on my end, but I can also tell my laptop is like heating up a bit because I can hear it revving. So I focus on investor relations. My background though has been in the nonprofit world for the last 5 years, 5 to 7 now, with a little bit of a immigration in there through my paralegal degree. And I've always just loved helping. I feel like I've definitely shared this with Mel before, but my goal with multifamily is I want to open my own nonprofit someday. My goal is to buy a huge plot of land and build a bunch of tiny homes for children in foster care that are going to be aging out. And the process is that they would come in with the notion of either going to a school, getting some trade, do something so that they have a better chance at life once they're out of the foster care system. So that's really what my goal entirely is with multifamily. It has opened up a whole new avenue for me. And I love it. I love connecting with people, and everybody here is so nice always. So I find that I've made great connections, and a lot of them have actually already kind of even come towards as just I've connected a couple of people with like a couple of nonprofits here out by me. So it's been great, and I hope that I'm able to connect more. I also host a bi-weekly podcast now that I would have never probably started if it wasn't for multifamily. So that's been exciting. And I do this with my partner. So me and him have been doing this for about 8 months now, probably a little bit more. I think we'll have a year in June. So I think it's a little more now. But yeah, it's a little bit about me. And I'd love to hear more about you guys as well.
Morning, my name's Bebeth. I'm in Sacramento, Northern California. And I'm very new to multifamily. Just probably joined back in September 2023. But honestly, I didn't really get more into it or more engaged until just recently, maybe a couple months ago. I work as a pharmacist in the both clinical and IT settings. And I'm wanting to incorporate with healthcare, with multifamily as far as investing. I want to get more involved in investment, and then probably then as I get more well versed, get into the GP side. So as of now, I'm just gathering information, wanting to network, finding a team, getting more well versed in this space, and just learning about multifamily and investments. And so far, I've been meeting a lot of great people. So as a beginner, I just wanted to get into capital raising. I enjoy numbers, so I want to go into like underwriting as well. And so far I've been kind of spreading the word with my colleagues, among my pharmacy friends and a few of my dental friends about multifamily. So they are curious. They're asking me about it. And I just want to be able to get that knowledge so I can be able to provide that information. A lot of them do, investments, but mostly like single family. So multifamily is totally new, and I figure it'd be nice to close that gap as far as investing and get into finance, especially in the healthcare world.
That's awesome. So one thing I didn't say is that I spent about 19 years working in IT and in the IT field in general, different sectors of IT, but the last 9 was in healthcare tech. So I ran a team that supported a clinic and various parts at the University of Illinois in Urbana-Champaign. So anytime somebody says healthcare and tech, I'm like, wait, tell me more, because I still got a pretty big passion there, even though I'm full-time real estate investing now. But I always have to throw that out there when I hear those words put together.
Nice, yeah. It's a growing field, especially in pharmacy. So not pretty specialized.
Yep, indeed. Very good. Well, we've got actually, well, we only got a couple of minutes left. This is until 11:20 Eastern, so we'll be going back to the main room here in just a minute. But I don't know, any questions you all had about the meetup in general? Oh, time is up. Okay, I think we got to run. All right, we'll go back to the main room, and I think we've got some outro comments before we wrap up and let y'all go on this beautiful Saturday.
All right,
Thank
nice
you.
to meet you.
Thank you.
Yeah, likewise.